Hello, everybody, and welcome to our Ufile's Facebook Live event for today. We are April 5th. My name is Ida Celli. I will be your host. We're here to answer your questions. You simply write in the comments your questions and give us as much detail as possible. And to answer our questions today is our very own Gerry Vittoratos. Hi, Gerry. How's it going?
How's it going, Ida?
Pretty
How's
good.
everything?
Pretty good. You?
No, it's pretty good. Pretty good.
Yeah.
Pretty good, yeah.
So that's good.
All right,
And
I see people coming in.
you do? Okay. Still not popping up on my own screen here.
Yeah.
Okay.
Yeah.
So we're waiting for the first question. So let's remind everybody, tax deadline, when is it this year?
So this year, the tax deadline is a little different. In this case. It's going to be May 2nd because April 30th falls on a weekend day, right? It falls on a Saturday this year, April 30th. So the government always gives the first weekday, which would mean May 2nd this year. That's our deadline. So we get a slight extension from other years.
Okay. Let's start off with the questions before we come up to some other tax tips. So we have the next one, a very long question, and it's very detailed. It's from Andre Thomas. He says,
hold on. Maybe we
sorry.
could do Andre like a little bit towards the end, because by the time you read it, we're going to get like a lot of questions
Okay.
flowing in. Andre, what we're going to do, and thank you again, Andre, for coming. He's a good friend of the product. We'll answer you directly in the chat. Okay, we'll answer you directly there, because right now it's by the time you get through it, Ida, it's going to be
okay. It's a two-part question.
Yeah.
Okay. We'll come back to him.
We'll come back to you. Okay, we'll come back to you, Andre. So let's get to the other questions.
Mo
Okay.
said, hello, in previous version, I was able to see how much I was going to get back as a refund, but now with the new version, I cannot.
No, you should be able to. That's a basic feature of the program. You should be able to. So Mo, you're gonna have to contact our support line to see. Ida, where would Mo have to go?
Okay, if you're using Ufile online, simply email help@ufile.ca. State your issue, and you're gonna get an automated reply. Review what's on the suggested solutions. If none of them answer your questions, reply to that email and specifically say you need an agent to look at your tax return because you don't see the refund, or in the summary at least. All right.
Mm-hmm.
So now, next one, Mark.
Okay.
I'm a senior citizen getting GIS benefits. Last year, I put some of the CRB benefits I received into an RRSP to avoid a large GIS clawback, but now CRB income no longer counts towards the GIS supplement. What will happen in the future when I withdraw money from the RRSP? Will the income from the CRB benefits I put in that RRSP be regarded as income and used to lower my GIS?
Yeah.
And if so, how could I show CRA that the deposits into the RRSP were originally from the CRB income? And yes, it does make sense to Gerry.
Yeah. All right, Mark. Thank you for the question. Okay, so Mark, unfortunately, what happened in this case that the moment you've contributed them to your RRSP, they lose their original nature. Okay, the income, when you make the withdrawal from the RRSP, it's no longer a capital gain. It's no longer an interest income. It's no longer a CRB income. It becomes an RRSP income. So unfortunately, in this case, the moment you withdraw from your RRSP, it will be considered RRSP income, and yes, it will be factored, unfortunately, in the GIS. Okay, meaning that it will be income that will be used to lower the GIS that you would be entitled to in this case. So in other words, Mark, the income will not keep its nature. Okay, in this case, the moment it goes to the RSP, becomes RSP income as of that point, and then when you pass 71 years old, it becomes RIF income, which will be the exact same concept. So the government doesn't care what you made on it; it's the withdrawal amount that counts as your income.
Okay, next question from Yilin.
Mm-hmm.
My friend left Canada on February 1st, 2022.
Mm-hmm.
Then sold his house on April 7, 2022. Completion date. Can Can he qualify as resident of Canada for this house sale?
Actually, yeah. In essence, even though he's a non-resident, starting February 1st, he will still have to produce. Your friend will still have to produce a tax return for the sale of that residence. Okay, so they will have to produce a T1 and pay provincial tax as well. So in essence, yes, they would be subject to Part 1 tax, as we call it in income tax lingo. But long story short, in non-legalese language, okay, what's going to happen to your friend is your friend, first of all, has to file a final tax return as an immigrant to Canada and declare their departure date as of February 1st, 2022. And then they will be required to file a second return, okay, where they will have to declare the sale of the residence, okay, and whatever profit might have happened on that sale, and would have to pay tax on that profit, federal and provincial. Now, if it's a principal residence, you can elect, you can designate the property as a principal residence and therefore not pay tax. But your friend would still be required to file a federal return for the sale.
Next question from Obi.
Mm-hmm.
Hello, Obi. He's asking, stock options that expired, worthless, are not listed on the T5008 from my broker. Do I
Yeah.
claim expired option as a capital loss?
No, you never took the options, which means that you never acquired the shares. So you have no taxable transaction in this case. So no, they're not a capital loss because you never exercised your option to acquire the shares. So if you never acquired the shares, that means you never had them. So there is no taxable transaction, hence why there's no T5008 in this case. And there is no capital loss or capital gain in that case. There's no transaction whatsoever.
Next question from Yilin.
Mm-hmm.
Can kids program fees like piano, coding, summer camps, etc.
Mm-hmm.
Fees are tax deductible, and if yes, where to claim these expenses?
So, Yelena, it all depends on the province that you're in. Federally, there's nothing you can claim, okay, on the federal side. But depending on the province you're in, you might be able to claim some of those expenses. So, what you can do is in the file of your child, there's usually going to be if you're eligible for it in your province in Ufile, what Ufile is going to do is it's going to generate an additional section in your child's file for either artistic amounts or sporting activities. Okay, and then you simply go into your child's file, you go to that section, which will generate automatically based on the age of your child and the province of your residence, in the province that you live in. And at that point, you make the claim, which will usually be a non-refundable tax credit. But again, it depends on your province. Not every province has this, and you definitely cannot claim them on the federal side, unfortunately. The old, what we used to call the arts amount no longer exists. It's been scrapped for quite a few years now.
Okay, next question is from Chris.
Perfect.
We sold our home in November 2021. Do both my husband and I need to report the sale on our tax forms?
Yes, you do. It's a principal residence transaction in this case. So if you both own the property, then both of you have to declare the transaction and then designate your property as a principal residence through the appropriate form, which is the T2091, and exempt yourself from the gain. Because if you designate all the years that you lived in that property as your principal residence, then your capital gain is tax exempt. Okay, there's nothing taxable to declare in that case, but you do have to declare it. So you go into the capital gains section of Ufile, and then you choose the real estate option, and then you declare the transaction, and then you designate your years on the same page. You're going to designate your years that you lived in that property as a principal residence, and you have no taxable transaction in that. In other words, you won't have a taxable capital gain to declare in that case.
He's also asking a little bit further down, would you
Yeah.
please just go over the fields in the personal property screen?
Okay. All right. So then, so Ida, I will have to
Yeah, you're
hide
gonna
you.
kick me out. I
It's a
get it.
running joke. It's a running joke that we get, man. I'm just gonna hide you there, and that's it. Problem solved, So, all right, let's go into it here, and all right, let me share the screen. So let me just give me 1 second here, and I will share the screen, my screen over here. Okay. So Ida, you will come back in a few minutes. Okay, so show in the stream, and let's do it this way. Perfect. All right, so right now I'm in Ufile. So first things first, what you have to do within Ufile is in the interview setup, you must choose the option for capital gains. okay, which is in the investment income and expenses section. So this is where you go. So you choose capital gains as your option. You click next. And then once you've done that, a new section will appear on your left-hand menu, okay, which is the capital gains and losses enable in this case. So you simply click on that option. And now you have two options. You could either go by real estate or depreciable property or go to personal use property. Either one will do the same thing. Since you mentioned personal property, I'll go to the personal property screen and click on the plus sign. So from here now, you will simply enter the details of your transaction. So the date of acquisition, the date of disposition, your proceeds of disposition, your adjusted cost base, and every other information that you need. And then from here, as I mentioned before, you've got the principal residence section that you need to answer. If you want to exempt the capital gain, you must designate all the years as a principal residence. Okay, that's what you need to do. So from here, you simply click where it says designate the principal residence. You say yes. And then once you've done that, you enter the address, and then you enter the years that you are designating the property as a principal residence. So in order to get the full exemption, you're designating all the years that you reside in that property as your principal residence. And then the program will generate the appropriate forms. First, it'll declare the transaction on Schedule 3 and tick the appropriate box on the second page. And then you will get the T2091, which is the form that is required in order to exempt, in this case, the capital gains. Be aware that you have to produce this form and you have to submit your return on time, even if you have a refund, okay? Because the designation has to be done on time. If you don't do it on time, then the government could charge you penalties for designating your property late for the principal residence. All right, so let's bring Ida back. And here we go. Wow. All right, here we go.
Okay.
Ida, for a moment there, you were just hovering over me there, you know? So, all right, perfect.
All right. Next question is from Monica.
Mm-hmm.
My son is 17 years old and made about $7,000 working last summer. Does he need to file a return this year?
Monica, yes, for the simple reason to get his money back. Okay, that's the whole reason why you would want to file a return. At $7,000, your son likely paid some sort of payroll tax. Okay, on the so it would be like a federal income tax that they paid at source. Okay, so in order to get that money back, because at 7,000, you have the right instinct, Monica. Your son is not taxable at $7,000 because he's below what we call the basic personal amount, which is at around $13,000. So he's not going to pay any income tax on his federal return. However, any tax he paid at source, your son is entitled to that amount back as a refund. Not only that, at $7,000, your son is smack dab into the eligibility, what we call the Canada Workers Benefit, which is a refundable tax credit for workers that are lower income Canadians. Now, at 17, he might not be eligible though. Come to think of it, I think you have to be 18 and above to get it. But in either case, he's entitled to the refund of any payroll tax that he's paid at source.
Next question is from Arun.
Mm-hmm.
If I want to e-file, is there a button to click on Ufile Windows? How to tell CRA that this is an e-file return?
Okay, so I'm assuming, well, with Ufile, it's called Netfall. E-file is more on the professional side. So this would be if a preparer was filing the return on your behalf. What Ufile will do is Netfall your return, but it's exactly the same concept. The only difference that you're doing it yourself with Netfall, while with E-file, it is a preparer doing it on your behalf. Okay, that's the difference between the two. Yes, Ufile is certified to be able to do this. It is simply the fifth tab. Once you've completed your return, once you've clicked on the results and there's no error messages that are preventing anything in your file, then you simply click on the fifth tab, which is called the Net File tab. Click on that and then go through the process of transmitting your return. Okay, it's as simple as that. It's a very simple process. It's literally you click on the Net File tab and then you simply say, I agree to the conditions. You simply tick the box that I agree to the conditions and just file. It's literally 2 clicks and your tax return has been submitted to the CRA.
And you get a confirmation.
Absolutely. Yeah. Forgot about that. Thank you, Ida. Yeah. So, and then once you transmit, Ufile will collect the acknowledgement and you have a record of the fact that the government has got your return. Okay. That they already have it.
Okay. Next question is from Andre. In a separation that sees the 90 days completed before December 31st, can the child be claimed on the $3,400 of the single parent's return. Should the
Yeah.
former spouse still do their taxes jointly for the last year?
Okay, so Andre, in this case, the separation, as you mentioned, the 90-day period. What Andre is mentioning here, and it's a very good point, Andre, that you're making here, is that to make a separation official. So let's say you break up with your spouse. Okay, there's a breakdown in your relationship with your spouse. In order to make the date that you broke up with your spouse official, you have to wait 90 days. And if there's no reconciliation within those 90 days, then the date of separation becomes official. Now, Andre, what you're mentioning here is that the 90 days have been completed before December 31st, which means that officially for 2021, the couple is separated. That means they're already without a spouse as of December 31st, which means that for eligible dependent, yes, now you can claim eligible dependent because you meet the criteria that at one point in the year you were without a spouse. You meet the criteria as of that moment. Remember that the separation date is the beginning of the 90-day period, not the end of it. Okay, so you meet the criteria of eligible dependent. The catch is though, if it's one child, for example, between the ex-spouses, only one of those spouses can claim the eligible dependent amount. The amount cannot be split between two ex-spouses. So there has to be basically an agreement between the ex-spouses to first determine who gets the amount, who's going to claim the credit, and then if the spouse who's getting that credit compensates the other for the fact that they got that credit. But on the tax return, only one of the ex-spouses can claim the eligible dependent amount and not both.
Okay, next question is from Christine.
Mm-hmm.
Can I file electronically with Ufile and make a transfer from my bank to the CRA or Revenu Quebec?
Yes, Christine, absolutely. Yes, that's the whole thing. So, Ufile, like I said, is electronic. So again, it's the Netfall tab. It's the fifth tab on your screen. Okay, when you're producing your return, once you submit, what you do is you log into your online banking, and when you log into your online banking, you simply add the Canada Revenue Agency and Revenu Quebec as a payee. Okay, just like you do with your other bills. Okay, so whatever other bills that you have, you've added these providers as a payee. For example, let's say Bell Canada or Rogers or TELUS or Fido, for example. You do the same thing. Once you add the Canada Revenue Agency and Revenu Quebec as a payee, they're going to ask you for an identification number. The identification number is your SIN. Okay, that's how the government identifies you. So you plug in your SIN number, you add the payee, same thing for Revenu Quebec. You add the payee, and then you just simply make the payment. Okay, you make the payment online just like you pay your other bills. It's exactly the same concept.
Next question is from Tavia.
Mm-hmm.
On the Ufile software, where do I place severance income received from a dismissal?
Okay, Tavia, it depends in what format you received it. More often than not, it'll be a T4. Okay, more often than not, you're going to plug it in as employment income or maybe other employment income. Severance packages usually sometimes come in as retiring allowances as well, which is again a T4, which would be box 66 of the T4. Your former employer should provide you a slip. Okay, that's going to indicate it, and it's more than likely going to be a T4 slip. If you haven't gotten anything like that, and if it's not a retiring allowance, then you plug it in as other employment income. So you still go to the employment income section, and you simply click on other employment income, and you plug the amount in there. But like I said, your former employer should provide you a slip or some sort of document that's going to explain how to do it.
Okay, next question is from Lydia. Where do I enter the information from the T2200, the remote work information?
Okay, so Lydia, let me show you. Okay, so Ida, unfortunately, I will hide you again. I'm not ashamed. Don't worry about it. I just have to hide you. All right, just have to hide you to show the client,
Sure.
here how to do it. So here we go. So share screen, and here we go. Okay, so Ida will be back in a few minutes. Showing the stream. Here we go. So we're back in Ufile. So first things first, I have to add the employment expenses section. So I go back to my interview setup over here. Okay, and while I'm in my interview setup, I tick the box in the employment and other benefits section. I tick the box next to employment expenses. Okay, I click next at the bottom of the screen. All right, you'll notice a new section called employment expenses that will appear in the left-hand menu. Here it is. Now, from here, now you have to choose the type of employment expense that you are entering. Now, you mentioned the T2200, which is the regular one, not the simplified one, is what you mentioned in your question. So therefore, it is likely you are either in the standard T777 forms, which is either commission income or salary. I'll take a stab that it's salary, okay, because more often than not, most people are salaried and not commission income employees. So I'll click the plus sign next to salaried, and then once you're in there, you plug in your expenses, okay, and all the information that it asks you, and you'll notice on the left-hand menu within these sections, you'll have a section called employment conditions. Okay, so you see it right there, employment conditions. Once you go to employment conditions, that is your T2200 right there. Okay, so we reproduce the T2200, and then you simply tick the boxes in which the yes has been answered for that box, for your conditions of employment. That's where you go. All right, let's bring Ida back. Here we go. 3, 2, 1. And Ida's back. Oh, and Ida's hovering over me again. Hold on. There we go.
We don't.
Okay.
I don't want to. I don't want to take the limelight away from you. All right.
All
Next
right.
question is from Josefa.
Josefa.
I
Okay,
have
perfect.
moved. I have moved from Montreal to Toronto in August and also changed employer.
Yeah.
Will I be filing a Quebec return as well? What happens to my refund from Quebec? What
Yeah.
happens to my bonus tax credits for investing in funds such as the labor sponsored fund like the FTQ?
Okay, so first things first, ordinarily, no, you would not be filing a Quebec return because you are a resident of Ontario as of December 31st. The only time you might be required in your scenario to file an additional Quebec return on top of paying Ontario tax is if, for example, you were covered under the drug insurance plan of Quebec, okay, which is normally paid on your tax return. Then in that case, you have to produce a special TP1 where you're only going to be paying the Quebec drug insurance plan for the months that you were living in Quebec. Okay, that's the only time you would have to file a Quebec return in that case. Now, there wouldn't be any refunds in Quebec because, like I said, you're now subject to Ontario tax because your provincial tax is based on where you reside on December 31st. So you will be paying now Ontario tax on your federal return. And now, because you're in Ontario, unlike Quebec, the rest of Canada only files one tax return, and you're only doing one transmission, which is to the federal government, and you pay your Ontario tax on your federal return. Okay, that's how it works. Okay, now for the labor sponsored funds, unfortunately, yeah, you might have some carry forwards. If there's carry forwards, unfortunately, I don't believe there's much you can do on those. However, if you do have FTQ funds, then you can claim them on the federal side and on the Ontario side. Okay, even though they're from Quebec. Okay, you would be able to claim them based on whatever credit the Ontario government would give for those labor-sponsored funds.
I just want to ask something regarding his question. If he's worked here, he has a relevé one,
Mm,
the taxes withheld at source.
yeah.
Where would he put that?
The transfer to the federal. That's a very good point, Ida. So what happens is, in this case, whatever income tax he paid to Quebec, which will be indicated on the Relevé one, will simply get lumped with the federal withholdings at source. Okay, so it's the federal government that will refund you for that amount instead of the Quebec government in that case.
All right. So let's move on to the next question. It's from Shelley.
Okay.
My son is a 16, had a part-time job, did his own taxes. Do I have to claim his employment income on my taxes? Where? And do I lose out on my refund?
Shelley, depends. Okay, you're not claiming his employment income. If you're claiming him for eligible dependent, let's say you're a single parent, in this case, then his employment income is going to reduce the eligible dependent amount that you are claiming on your return. Okay, that's how his employment income affects your return. Okay, but that's only for a single parent. If you're married or with a common law spouse throughout the year, then it doesn't affect your return at all in that case. Okay, so again, depends. Depends in this case. So you would produce your son as a family member to you, and the program will take care of all these types of claims. Okay, whatever these claims might be. Okay. Now, at 16, I don't think he'd be post-secondary, so there wouldn't be any educational transfers in this case. So yeah, that's basically it as far as the answer. That's your question.
All right, next question is from Kyle.
Mm-hmm.
So, can you please advise how I can indicate RSP repayment while doing my taxes in Ufile? I withdrew RSP funds last year to buy my first house and would like to claim how much I have paid back.
Okay, so basically, Kyle, I'll assume you're under the home buyers plan, that you withdrew from your RSP account under the home buyers plan in this case. If you've done that, then what you do is in the RSP section. Okay, or actually, it's in the other deductions. Sorry, it's not. First, you're gonna declare your your RSP contributions in the RSP section, because by repaying, essentially what you've done is that you repurchased in your RSP account. Okay, that's what you have done. Okay, so now if that counts as a repayment under your home buyers plan, if you're doing it early, because remember, under the home buyers plan you could wait until the second year to start making your repayments, which is 1/15 of the amount that you withdrew. Okay, now if you're making repayments under the home buyers plan, if you made them early, then you go to the section called other deductions. Okay, within the software, and other deductions appears for all the files. Okay, so you're going to see a section called other deductions and credits. You click on that section, and then on the page to the right, you're going to notice a section called repayments under the home buyers plan. So you simply click on the plus sign there and plug in your repayments directly there. Okay, so that's how you would do it. Again, I'm assuming it's home buyers plan. I'm assuming you withdrew under home buyers plan, which would be the tax efficient way of doing it. Instead of just directly withdrawing from your RSP, which would count as income on your return.
All right, next question is from Ed. Hi, Ed. I have an RSP question. I over-contributed to my RSP account, my mistake, in the first 60 days of 2022.
Okay.
I used all the excess to pay all my leftover home buyers plan debt,
Okay.
and was still over my limit by 3,447.21. Ufile
Yeah.
suggests that I carry forward this amount for a future year.
Yeah.
I think I should be okay to leave it as is, but could you please confirm that I don't need to withdraw the excess from my RSP this year to avoid penalties?
Okay, Ed, it depends. In this case, again, that's the answer to a lot of tax questions. Is it depends. It depends on your situation. So first things first, what Ufile is suggesting is actually what you have to do in this case. You have no choice, because you don't have enough limit to use up your RSP. Use up your RSP contribution, then you're carrying it forward to the following year. That's essentially what happens by default. Now, maybe the language that Ufile is using is not. To suggest to carry forward is not really a suggestion. It's really, this is what's going to happen. Okay, this is what's going to happen. Now, as far as any penalties on your overcontribution, it depends on your limit. Remember that your limit gets recalculated every calendar year. Okay, so when you file your tax return, the government is going to recalculate for you your new RSP limit, which means you might not even be in an overcontribution scenario where you have to pay a penalty for the fact that you overcontributed. If in 2022, under the new calculation of your new limit, which will be done on your notice of assessment when you file your return, you have enough room, then your 3,400 is fine. I think that was what it was, right? Yeah, 3,400 is okay. The only difference though is that, remember now that 3,400 which carries forward, you've already used it now, right? So when you make your new contribution for the year, you have to be mindful of the fact that you've already made a $3,400 contribution that's already in your file. So you have to factor that in when you're making your new contributions.
A quick question for you, Gerry. Is the 2,000 over contribution still allowed in your RSP without being penalized?
Yes. What the rule is, you're allowed to carry forward your limit plus 2,000. Okay, without penalty. Meaning that, for example, let's say I've got $5,000 limit. Okay, and I've got and I make a $5,000 contribution and I don't want to use it for whatever reason, whatever my reason is, I don't want to use it as a deduction. Then what I'm allowed, that 5,000 is allowed because I have the limit, but I'm also allowed to go up to $7,000. Okay, which is that $2,000 extra. So the government gives you this kind of like cushion of $2,000. So the over contribution calculation is based on your carry forward, meaning that you are allowed essentially up to your limit plus $2,000. Anything above that you're carrying forward, now you're subject to the over contribution penalty, which is 1% per month for the amount that you're over on that $2,000. That's how it works.
Great. Okay, next question is from Vicky.
Mm-hmm.
On a T3, there is a bracket around an amount. Do I record that in Ufile?
Yes, it depends where it is. You might have a capital loss. I'm assuming it might be a capital loss in this case. It might be a box 21 on your T3 slip. Yes, you enter it in as a negative amount. Okay, the program is equipped to take it. If it's a capital gain or loss, it is equipped to take the loss in there. So you simply put a minus sign with your amount, and that's your amount in bracket.
Next question is from Shirley.
Mm-hmm.
Where in the software do I put the sale of a country property?
That would be under real estate. So what I showed before, under the principal residence, it would be under real estate. So I'll just go back real quick. Sorry, Ida. I'm just going to hide you again. Sorry about that. Show over here and let's go back. So as I showed before, in the capital gains section, okay, you can go, usually the best option would be real estate, depreciable, and other properties. You would simply go in there. You would click on that and simply enter the details of the transaction. Okay, so enter all the details in there. I'm assuming it's not related to principal residence if it's a country period property, unless you've lived in that property at a certain point in the year. Then you could also designate it as a principal residence. We've got a great video on our Ufile page which explains that concept of where you could have two properties that can be simultaneously eligible for the designation of the principal residence. But you have to be mindful of the fact that you can't designate two properties for the same year. Okay, when you're designating a principal residence, that's the catch. Okay, so go to our YouTube page, go to our official YouTube page, and we have a great video that explains the concept of principal residence, the tax concept in this case, principal residence, and we also have a video on how to enter the transaction of principal residence. So in general, this is where you would go. It would be real estate and other properties. That's where you would go. All right, let's hide Ufile. Let's bring back Ida. There we go. All right.
Okay.
Let's keep going.
Next question is from Kevin. I have a developmentally delayed boy who went into a group home partway through the year. Am I entitled to claim him caregiver for the period he still spent with us? The tax software only asks if he lived with us, which he did, but only part of the year.
Kevin, I believe you can. The caregiver now has been the criteria has been is more relaxed since a couple of years ago, where the requirement was that you were with them throughout the year. I believe you can in this case because they did live with you for a certain portion of the year. And even if they don't, you can still, I believe, claim caregiver as well under the new relaxed rules. We'll confirm that to you in the chat because, yeah, these questions always come up. And it's a case-by-case basis. It's based on, it's a factual question, right? Whether whether you were tending to their needs or not. But I believe now, since 2017, if memory serves me, the government has relaxed the criteria as far as living with the person on a continuous basis. So I believe you can claim in this case the caregiver amount.
Okay. The next question is from Shelley.
Mm-hmm.
I'm not sure if we answered this one. Also, when my son did his own taxes with Ufile for the first time as a 16-year-old, and at the end it said he had applied for taxes before, which he has not. This was his first time.
Okay, you have to indicate it, Shelley, in the software that it's his first time. In the CRA questions, one of the first questions you're going to see in the section called CRA questions, the program asks whether it's the first time he's filing or not. So choose yes to first time filing, and then the program will that should remove the error message that the program is giving you in that case.
Okay, next question is from Dina. If someone works in Nunavut, what things needs to be completed in the T2222 in order to get the Northern Residence deduction? Also, in this case, we need to complete the T777 as
As
well.
well. Okay. So Dina, in this case, they need 6 consecutive months living in Nunavut. Okay, and what I say is consecutive. Now, the key here is that the 6 months don't have to be all within 2021. Okay, they could be between 2020 and 2021 or 2021 and 2022, as long as the person was living in Nunavut for 6 consecutive months. So that's what you need to enter in the software. So when you are inputting the section for Northern Residency deduction in Ufile, Ufile is gonna ask you for the period, the residency period. So you have to enter the date when they first started living there and the date and the final date that they were there, and it has to be at least 6 consecutive months. If they don't meet that criteria, then they can't claim the Northern Residency deduction. And for those who are listening to us now saying, what is Northern Residency deduction exactly? What it is the government gives a per day flat rate deduction for every day that individuals live in what the government calls a northern prescribed region. Okay, meaning that if they live above a certain point, they get a deduction for every day that they live there, but they have to live there for 6 consecutive months. The other thing you can claim, Dina, on your in the Northern Residency deduction is the travel costs. So, for example, if the person had to travel between 2 points in the northern area to get medical services, or they just travel for any other reason, then the expenses that they paid for that travel can be deductible as well under the Northern Residency deduction. There are, of course, criteria. It's the lesser of three amounts. I don't want to get into a whole course of Northern Residency deduction. It can get quite technical, but basically, what they can claim is the cost of the trip, or the taxable benefit they get if they were reimbursed by their employer, or the cheapest airfare, equivalent airfare for the trip. Okay, it's the lesser of the three that they're allowed as a deductible, as the deductible amount for their trip. Okay, that's what they're allowed. T777, it's standard. I mean, that whether they live in the Northern Residency area or not, doesn't matter for the employment expenses. Okay, you claim employment expenses like you would any other individual. So you simply, as I showed before in the video earlier, you go to employment expenses and then you tick on the T777 for a salaried or commission, whichever it is. And at that point, simply complete and enter the eligible expenses that they incurred.
All right, the next question is from Basel. Hello, what are the most common and new expenses we can claim this year?
What are the most common and new expenses we can claim this year? Well, common, it depends on your situation. Common can be very relative in the Income Tax Act. It really depends in this case. As far as new expenses, I mean, home office is still there. The new temporary flat rate method can be claimed, just like in previous years where you're claiming a $2 per day deduction for every work day that you're required to work from home due to the pandemic. So the government extended that program. Okay, and is also increasing the maximum amount to $500. Beyond that, the government is extending also the definition, is extending the expenses that can be claimed by eligible educators. So, for example, if you're a teacher in a daycare, in a primary school, or in a high school, and you paid for supplies out of pocket for your school, the government is allowing you to claim those expenses. This is an existing credit, but what the government is allowing for this year is to claim expenses that are related to online courses. So, for example, you buy a camcorder, you buy a headset like I have right now. All these expenses now are eligible, whereas before those supplies were only eligible if you use them in a classroom setting. Okay, so the government is extending it, and on top of it, they're enhancing the credit rate. Whereas before you could claim 15% of the eligible expenses, which are capped to $1,000, now you can claim 25% of those expenses. So that's another example of a new one. And then the last one I could think of off the top of my head now is if you had to repay any COVID-19 related benefits. For example, if you were overpaid the CERB, or if you were overpaid the CRB, then you could take that overpayment and match it to the year that you collected the payment instead of the year that you repaid. So, for example, if you repaid the CERB in 2021, you could actually deduct that repayment in 2020 and make an amendment or an adjustment to your 2020. So, those are some examples of some of the new things that came about.
Our next question is from Lydia.
Mhm.
Do we have to complete 2020 taxes before we can file our 21 taxes? How long does it take for the government to produce the documents for the 2020 notice of assessment? We need to be able to file for 2021.
Okay, in theory, Lydia, no. On a technical level, the government will accept your 2021 even if you haven't filed your 2020. The reason I would recommend that you do your 2020 beforehand, though, is because you might have certain carry forward amounts or claims that you can make in 2021, but only if they are recognized with a filed tax return in 2020. Now, I believe we can transmit prior years, right? Through
Yes, we
Netfall.
can.
Yeah,
The government will allow.
the government will allow it. So what you can do is you could transmit now your 2020. The government should assess it relatively quickly because you're allowed to transmit a prior year. Okay, they should recognize very quickly. And once you get that recognition, file your 2021, or quite frankly, file both. You could actually do that on a technical level. But like I said, I would recommend doing your 2020 and file it as soon as possible and get that recognition from the CRA, because you might have amounts that the CRA will recognize that you can claim against your 2021 return, meaning carry forward amounts. Like, for example, capital losses that you can capital losses you incur in 2020 that you can claim in 2021, tuition fees that you have in 2020 that you can claim in 2021. But the only way you can make those claims in 2021 is if the government assesses your 2020. So as soon as possible, file your 2020, transmit it electronically. The government should recognize it pretty quickly and send you an assessment within the week, and then file your 2021 so you can get those claims.
Next question is from Hassim, sorry.
Mhm.
I booked a pre-construction condo and took possession in 2021.
Mm.
The HST that I paid was about $50,000. Can you please advise if I can claim this amount in my business expense? I am a salaried individual and this is my first investment rental property.
Okay, so this is a rental property then in this case. So yeah, what you're going to do is a sim in this case. What you're going to do is you're going to claim it. You're going to add it to the cost of the property. So when you are declaring your rental income on the form, you have to also declare the value of the rental property. So for the purposes of a depreciation expense, or as in the technical lingo called CCA, capital cost allowance. So you have to make an addition to class one at 4%. Okay, and when you make that addition, you're going to include your HST with that addition, and then you're allowed to depreciate it afterwards at a rate of 4%. That's what you're allowed. You can't claim it as a current expenditure, unfortunately. What you can do, though, is add it to the cost base of the property that you are using to claim the depreciation expense, or in tax lingo, the capital cost allowance. That's what you can do.
Next one is from Anna. Uh, Thank you, Anna. This year, my son had a number in box 50 on his T4. There was no box 50 in the program. Can you
Yeah.
explain to me what this number is and why the employer added it on the T4 if I don't have to report it? Thank you.
Let me have a look 1 second, just give me 1 second to have a look at the actual box. I don't remember what box 50 is. I'm just looking at it now. So, okay, so box 50 is, it's actually an identifier number even. It's not even, yeah, what it says here is RPP or DPSP, Deferred Profit Sharing Plan registration number. Okay, so no, it's not even an amount. It's not even an amount, Anna. It's basically just the account number for the registered pension plan that they have with their employer, or the deferred profit sharing plan that they have with their employer. That's all box 50 is of the T4. That's why you don't enter it. So it's your son, right? I believe. Right? Yeah, my son. Yeah,
Yes.
exactly. So your son is contributing to either an employer-sponsored pension plan or an employer-sponsored profit sharing plan, meaning that they get a certain percentage back of the profits that the company makes. And that's all it is. Just the account number. That's all it is. So there's nothing for you to do. That's why the program doesn't ask for it.
Okay, next is Shirley. Where do I put in the software the sale of our country home and land? Where do I put in the software replacement of a roof on a principal residence?
Okay, I
Didn't
think
we
we had
answer?
answered that question. I think Shirley had answered your question
What
earlier.
about the roof?
Okay, the roof, nowhere. Unfortunately, on a principal residence, nothing is deductible on a principal residence. Unless you are using a portion of the principal residence as a rental, then you can claim what's called the roof based on the rental portion of the property. And you could depreciate it actually, because in this case, the government will consider it as a capital expenditure, not a current expenditure, meaning that you could only claim it as a depreciation under the depreciation cost or CCA, as I mentioned before. Okay. But if it's purely your principal residence, no can do. Unfortunately, because the sale of that principal residence can be tax exempt, you cannot claim any expenses on that property, unfortunately.
Okay, next question is from Karina. When entering work from home, the $2 per day allowance you filed 2021 still says 2020. So I'm assuming she's using the Windows product. It's very important. You need to update it. We've had several updates since February 28th. So it's very important that you update the software because it is changed to 2021.
Yeah, it could be.
Correct me
It
if I'm
could just
wrong.
be
You could
the.
look.
It could be just a text in the interview. By the way, the forms are correct. You don't have to worry about the forms. Just make sure that you're in Ufile 2021, and maybe it's the text within that area that's wrong.
But I think
Um,
that was updated.
yeah,
No,
so
actually, I know
that
it
should be
was updated.
fixed.
It was updated
Okay, so there
before
you go.
Netfall opened. So you need to update the software. Very
Okay,
important.
perfect.
Paul, I see you're having an issue with the autofill my return. Can you please reply to that email you got that gives you the suggested solutions that didn't work? Reply to that email saying you still need a technician to help you, and then in on our Ufile page, go into Messenger and give me your email address, and I'll have somebody follow up for you. So
Perfect.
it's kind of long, so
Yeah. Well, just like Andre,
and
we'll get back to
yeah,
him.
that's it.
Yeah.
So, Crystal, how to use Ufile to enter medical expenses approved by province but not covered by Revenue Canada.
Normally, Christoph, the rules are going to be the same. I think the only because basically it depends on the province as well that you're in. If you're in Quebec, yeah, there could be differences, and then you're going to have the icon, which is the fleur de lis with the maple leaf, where you click on it and you can enter a different amount for Quebec. But if you're in the rest of Canada, you are bound by the claim that you're claiming on the federal. So whatever you're claiming on the federal as medical expenses, what you're claiming on the provincial side, Now, there could be areas where certain provinces don't recognize certain medical practitioners as medical practitioners. Okay, not every province is the same because, of course, healthcare is a provincial jurisdiction when it comes to the Canadian Constitution. So at that point, it's the provinces that determine whether these people are medical practitioners or not. But just be aware that if that's the case, then you are claiming it on the federal as well, because if they are recognized practitioner provincially, they will be recognized federally as well. So in this case, whatever you claim federally, you are bound to claim the same amount provincially. You can't distinguish between federal and provincial for the rest of Canada. For Quebec, it's different because Quebec, some of the rules are slightly different between federal and Quebec. So at that point, like I said, next to the expense that you're entering, if you're in Quebec, you're going to see a fleur de lis with a maple leaf, okay, icon. Simply click on it, and you're going to see an additional entry for Quebec that's going to appear.
Okay. Next one is Mart.
Mm-hmm.
Parents lived with us until February 2021 when they moved to long-term care.
Mm-hmm.
Long-term care expenses is based on their pension, which is the OAS and CPP.
Yeah.
Can we consider them as dependent and transfer medical expenses to us?
Mart, it depends if you paid for the expense or not. That's what it depends on. You have to show proof that you're the one who paid. But from what I see here, you matched it to their pensions, right? That's what I'm noticing here is that you made sure that the OAS and their CPP essentially covers the cost of the medical of the long-term care facility, which means legally speaking, your parents have paid in this case for the long-term care facility and not you. Okay, so in that case, you can't claim it in that scenario. Okay, you can't. The government is very clear on it that you have to show proof that you are the one that paid for these expenses out of pocket and not your parents. So in that case, unfortunately, you can't claim it. Unfortunately.
Next question is from Sherilyn.
Perfect.
I received a T4A in my name. Shown
Mhm.
in box 106 is approximately 3,400, which is a death benefit.
Okay.
Line 13's line number
Yeah.
says to only report the amount received that is more than
More than
10,000. Is
10,000.
that correct to not enter this anywhere on my return?
Cheryl, it depends. You have to make sure that it falls under the definition of a death benefit. Okay, so you have to really make sure. Who received it? Shown says
She
only.
did.
Oh, she did. Okay, so yeah, normally Cheryl, yes, if it's a death benefit, so the death benefits that are entitled to the $10,000 deduction are death benefits that are related to an employer, meaning that this was an amount that you got for an ex-spouse, for example. Ex-spouse meaning your spouse is deceased, so now you are widowed. In this case, so if you are widowed, your deceased spouse in this case received some sort of benefit due to their death that is related to their work. Okay, and they got it from their employer. If that's the case, then yes, you are entitled to the $10,000 deduction, and you don't declare any income on your return in that case. But you have to make sure that that income amount is related to that specific type of death benefit.
Okay, just Yilin was wondering if we would post a recording. Yes, after the session, the recording will upload itself in Facebook, so you could watch it at a later date.
Yeah.
And we also will be putting it on our YouTube page. So next is Trinity. I
Okay.
have many questions, but here is the first. Can you please clarify what is the Quebec tax shield? I never know if I should apply for it or not.
Trinity, you want a tax course now. You want a full-fledged tax course. All right. Let me try to explain it in non-legalese, okay? As non-legalese as possible, okay? What the tax shield is, and it was conceived actually by a former professor of mine, which is Luc Godbout, who's the head of the department, the tax department of Université de Sherbrooke, which I got my master's from. What he designed with a tax shield, which is actually a brilliant idea that he came up with, is let's take a scenario where you have childcare expenses, and usually the tax shield is targeted towards childcare expenses in Quebec and the work premium in Quebec, which is the equivalent of the Canada Workers Benefit on the federal side. Okay, so what this is a lot of times when you start making more income, okay, let's say you found a better job out there, okay, and you made more income. What the first consequence of you making more income is, of course, you're going to pay more taxes, right? Because you're making more income, you have more income to declare, your tax rate's going to go up. Here's though the nasty side of that increase as well. Not only are you paying more tax there, you're also going to start losing benefits on the other side as well, because a lot of benefits and credits that you are claiming based on your tax return are based on your income. For example, the Canada Child Benefit. Okay, for example, the child support on the Quebec side, the equivalent of the child support Quebec side, GST credit, solidarity credit, and the other one is childcare expenses as well. So this is kind of like a hidden tax that you're paying because you are increasing your income in this case. So first, you're going to pay more income tax in general because you have more income to declare as taxable income. But second, you're also losing credits because these credits are based on your income. As your income increases, your credits decrease as well. Okay, so what the tax shield does, more specifically in Quebec, for the child tax for your for childcare expenses, is it provides a buffer where you won't lose that credit with your increase in income. Okay, so even though you've made $5,000 more, let's say, and I believe the cushion is four actually, so let's say 4,000. Let's say you made $4,000 more. Under normal circumstances, you're going to pay more tax and get less childcare expenses. Under the tax shield, you will pay more tax, but you won't lose your childcare expenses. You'll still get the same childcare expenses as you were getting under your old income. Okay, that's why my professor called it the tax shield. Okay, that's why he called it that way, and it's a great credit. It's really because you're not going to lose those benefits based on your increase in income, and that's what the tax shield is. I hope I explained it in a non-legalese way that's understandable to everybody. I hope so.
Okay. Vicky is asking, this year my age amount is less than last year. Why?
You made more money, Vicky. That's why it actually comes right back to what I was just mentioning before. It's exactly right. So this is the hidden tax of more income, right? Is that not only are you paying more income tax, you're also losing credits and benefits based on your income. And the age amount is such a credit that gets reduced based on your increasing income. So that's why you got less. And that's where, to go back to the tax shield that I was mentioning before, that's where the Quebec government, using my professor's idea, that's what they came up with, is that they come up with a buffer where if you make more income up to a certain limit, you don't lose those credits. You don't lose those benefits. That's what the tax shield is.
Okay, just to refresh, Mo, I think you've asked the same question. You absolutely need to contact the support if you cannot see your summary on tab 3. There, either it's not calculating or whatever the reason is. So please contact support, ufile at no help at ufile.ca, and reply to the automated email. Next is Basel. If received CERB and then worked in 2021, do I need to pay back CERB payments? If yes, how can we reduce it?
So if I receive CERB and then worked in the year 2000, do I need to pay back the CERB payment? If yes, um, yeah, well then you would have to what you would have to do is contact Service Canada and make an arrangement with them to be able to pay it back. That's essentially what you would have to do, Basel, in this case. That's the only way
Okay.
you could do it.
Next is from David.
Okay.
My social insurance number changed this year because of permanent residence. What
Yeah.
SID number should I use to file from previous year to the new? Uh,
The new or
no,
the
no,
old?
yeah, the new or the old.
The new. The new. Your old one is gone now, David. It's in the past. You know, the government it doesn't exist anymore. You know, so you have to use your new SIN number to file your return.
Okay, the next question is from Anne Marie. My mom passed away October 18th. She worked till her death. She always claimed her gas, medical expenses, etc. Do I still do the same?
Um, by claiming gas medical, yeah, I mean, nothing would really change. I'm assuming she claimed employment expenses. I'm assuming, in this case, that's what I would assume. Yeah, nothing changes. You're going to claim up until the date of death, whatever expense your mother had up until her date of death is what you're going to claim. That's so nothing really changes there. As far as employment expenses, doesn't matter whether she passed away or not. She's entitled to those expenses, so you can claim them.
Okay. Next question is from Bill.
Yeah.
The first question, why do I have an RSP deduction limit of 25,000? I am too old to make deductions.
Okay. So number one, Bill, you're probably still working. So what you're not allowed to do is make new contributions, but nothing prevents you from having carry forward contributions that you never used and continue to deduct them if you continue to create room. Because if you continue to work past 71, you're still creating RSP room. What you're not allowed to do is make new contributions, but you can deduct any contributions you had already in bank under your carry forwards. That you're allowed.
His next question
Yeah.
is the home renovation expense claimed also a medical expense? My expenses was 30,000.
Yes, in theory you can. So I'm claiming. So I'm assuming you're talking about the home accessibility tax credit in this case. Yes, you can. The key though is that the expenses you are allowed to double dip. It's even written in the law that you're allowed to double dip. So you can actually claim them both. Okay, for the same expense on top of it. The catch is though on the medical side you have to have a disability certificate to claim those expenses. While on the home accessibility side, all you need is age. All you need is to be 65 and above to claim them. So so that's the key. If you are disabled and over 65, then you're allowed both, and you're allowed to claim them simultaneously. And it's even written in the law that you're allowed to double dip. But if you're not disabled, if you're claiming home accessibility due to your age, then you cannot claim those same expenses as a medical expense because under medical they require a disability certificate.
And his next question is, I have a prescription for vitamin B and D, but this is available and purchased without the prescription. Is it still a medical expense?
Yeah, I mean, if it's a prescription, normally it can be because the vitamin B and D that you're getting might be a different size than what's being sold on the counter. Um, yeah, it gets a little tricky in that case. You know, I would say, I mean, but you have the prescription. You have the prescription that shows it. So at that point, if you have the prescription, then yes, you would be allowed in this case to claim them.
Okay, Douglas, I have previous year's charitable givings available in idles. Will the program automatically use them?
Yes, absolutely. If you indicated them, you didn't use them in the software, okay, and they're part of the carry forwards within Ufile. Ufile will use them up automatically as long as you can. As long as you're taxable, the program will do it.
Dina, sorry.
Mhm.
If a kid turned 18 years old in 2021, should the kid file tax separately, or can he still be still added with parents in new file?
Okay, so Dina, it depends. Again, do you have amounts that are transferable between the child that's over 18 and it's 18, right? Not 21. Okay.
18.
What's called 18. So remember, and there's a few factors to consider. First of all, is the parent a single parent or not? That's number one. Because in the year that they turn 18, you can still claim the child for eligible dependent. Because again, you meet the criteria at one point in the year. Okay, that's the key there for eligible dependent. That's number one. Number two, are there amounts that are transferable between the child and the parent? For example, do they have tuition fees? Do they have excess tuition fees that they don't need to reduce their federal and provincial taxes to zero? If the answer is yes, then yes, you add the child as a family member, and the program will make these transfers automatically. So it all depends. But yes, you can still leave them there as dependent in the file of the parent. There's no problem there.
Next question from MRZ. Can I deduct mortgage financing cost of rental house, such as appraisal, lawyer's fee, etc.?
Yes, appraisal and lawyer's fee would be added to the cost usually. But yes, I mean you could add it as a professional fee as well. If it's like appraisal, usually it can be in this case. But usually these fees are related to the sale of the property. You know what I mean? So if it's related to a sale, then normally the government will consider it as capital in nature, which means you're adding it to the cost of the property. Okay, you're adding it to the ACB of the property itself, and you can depreciate it afterwards as a depreciation expense. I think we got quite a
Okay.
few questions now.
I think we got, however, we're not taking any more new questions. We'll
Yeah,
just try to finish
we'll just
what's
we'll
here.
finish whatever's here. Yeah, because I think we're way behind here. Yeah,
We're running
what I
late
can
a little
see.
bit.
Yeah,
Okay, Yilin,
yeah.
part of the house, I guess it's a country home, or part of the
No, it's
house
somebody
less
else
than
now.
25% was rented.
Mhm.
No CCA claim, no structure change. After this house sold, can I claim 100% as principal residence for the capital gain exemption?
Not fully, no. No, you're only allowed for the percentage of the house that was the principal residence, which means in your scenario, you have two transactions to declare. You have one transaction for the rental portion, which will be fully taxable, and you have another transaction for the principal residence portion, which you can designate as a principal residence and claim the full exemption. But actually, if you actually go to our blog site, ufile.ca, our last article was on principal residence, right? Wasn't it, Ida? We just posted, I think.
Yeah, we just posted it.
I just posted, and I explained that concept actually. What your case is there on our blog site, on our website, which is ufile.ca. Go to the tips tab, and then go to the Ufile blog. The last article that we just released now, I think it was yesterday that we released it. We explained that concept. Okay, we explain exactly how that works.
Okay. AY,
Mhm.
how do I file capital cost allowance for an electric vehicle? I'm self-employed.
I'm self-employed. Okay, so you do that in the vehicle expenses. That's what you're going to do. You're going to choose, I believe it's class 54, if memory serves me. That's what you have to choose in the vehicle expense. So you have to add the vehicle expenses. Okay, within your vehicle expenses, the program is gonna ask you, is it a purchase vehicle or a leased vehicle? You're going to choose purchase vehicle, and then you're going to choose class 54. Okay, and that's where you're going to enter the vehicle to claim the capital cost allowance.
Okay. Anul, my kid my kid eligible for disability tax credit for 2 years and got a letter from the CRA, but I wasn't declared to
Yeah.
CRA for 2020 tax year. How can I reassess the 2020 tax return?
You do an adjustment. That's what you're going to do. You're going to do an adjustment. You're going to file it with the disability certificate. If the CRA has already okay, so you got the letter from the CRA, then you have to adjust the previous year. The best way to do it is to go to the My Account portal of the CRA. Okay, that's usually the fastest way. You declare the disability tax credit essentially, and just file it directly through the My Account portal of the CRA, and the government will reassess and give you the credit in this case. We'll give you the credit back.
Terry, can you income split between spouses the CPP and the OAS?
Nope. Unfortunately, no. Those are the two. Those are two. There's some other exceptions as well, but those are the two glaring ones that the federal government does not allow. So basically, what they allow is an RPP, registered pension plan. They allow RSP, and they allow a RIF if your age is over 65 for those two. Okay, but CPP and OAS are not part of the eligible pension income. Therefore, you cannot split them.
Judith, what is the adjusted cost gains?
Adjusted cost gains. I'm not sure. I'll be honest with you, Judith. I'm not sure what you're referring to specifically. I don't know if you could add some details. Adjusted cost gains.
Okay,
I'm not
well,
sure. We'll come back. Judith, if you could just write another thing in the chat, and we'll come back to you in the chat for that one. See if we could answer the question.
okay, Claire, I bought a house in 2012, renovated it, and rented it out from 2013 until 2016. When I moved in and sold, when I moved in and
Hmm.
sold it in 2021, I never claimed CCA, nor did I designate any other property as my
Yeah.
principal residence. Can I designate the house as my principal residence for all the years that I owned it by the virtue of the subsection 45
Three.
bracket 3?
Yeah.
How do I answer the designated?
Carol, I think I recognize you from YouTube. I think I recognize you from a YouTube question that I believe I answered. Um, Carol, there's just one issue. Did you declare the disposition in 2016? That's the first question. Because normally you have a change of use in your case. Okay, in 2016 you did a change of use of the property, which normally has to be declared, and you could elect under 45.2 not to declare the change of use. Okay, now since that was not done, what's called? I'm assuming it wasn't done. I'm assuming there was no change of use or 45.2 taken in. Rented it out from 2013. Okay, no, hold on. Rented it out from 2013, 2016 when I moved in and sold it. Okay, so yeah, May 2016 is when you moved in. So that means that okay, so it was okay, no, so oh no, you are under 45.3. So it's a rental that became a principal residence. Okay, so you never declared it. Yes. Carol, yeah, sorry, I misunderstood. I was looking at it in reverse. So yes, in this case, you can elect under 45.3. You have to produce a letter though. Okay, you have to produce a letter that stipulates that you are electing under 45.3. Okay, in this case, you never took CCA, you never designated. So yes, you can go 4 years retroactive. You are allowed under the provisions of 45.3. You're allowed to go 4 years back, meaning that from 16, 15, 14, and 13, you can designate it under the election of 45.3. Yeah, it's textbook, Carol. You did it textbook. It's great. You're good to go.
Judith, yes, this recording will be available
Yeah.
after. Gaetan, he wants to know, how can you modify a submitted tax return?
You do it through the refile, right? It's this through the refile feature that you do it in the software. I don't remember exactly which section it is. I think it's in the Netfall section, if my memory serves me. But you just tell the program that it's a refile return, and then just retransmit it under the Netfall tab. That's all you need to
But
do.
you must have the
You
notice
must
of
have an
assessment
NOA. Yeah,
must be issued. Even if you haven't received it, it has to be issued before you can refile.
yeah.
Fung, does Ufile allow a client to enter interest belonging to the NR4? I cannot find the form
Hmm.
1099-ENT from it.
Yeah.
If no such form from Ufile, what should I do?
Put it in the equivalent Canadian slip, which would be a T5 slip. That's what you do essentially. So we don't have an NR4 equivalent in the software. What we tell clients is to use the equivalent slip of a Canadian resident. Okay, which would in this case would be a T5 slip for interest income. So plug it in T5, and I believe it's box 13 in the T5. Just plug it in there.
Okay. Leo, you had to
Although
type in your
actually,
question.
hold on. No, let me go back to Fung 1 second because it says I cannot find the form 1099 INT from it. Okay, so sorry, this is a foreign income then, not an NR4. Sorry, I was thrown off. So no, that would be foreign income then. I'm sorry. I apologize, Fung. It's actually foreign income that you would use. Okay, so you would go into the software, you go to the investment income section, and there's an option that says foreign income. Tick that box, click next, and then go into foreign income and plug it in as a foreign interest income. Yeah, sorry. Go ahead. Sorry about that.
Okay, next is Devin.
Devin. Okay.
My stepson is an apprentice mechanic. and has
Yeah.
tools required for his job. I've
Yeah.
added the tools all to his return for this year. Is there anything I need to know about the intricacies of these credits to avoid a situation where his return changes upon his reassessment?
No, I mean, you could deduct the cost. There's a limit. There's a ceiling that you could claim for those costs specifically. But no, there's nothing special after that. Really, it's just I mean, he wouldn't have employment expenses because he's a apprentice mechanic, meaning he's working there, so he wouldn't have home office expenses. That's for sure. No, I mean beyond that, no. You deduct the expense. As simple as that. You deduct it. It's a deductible expense.
Next question is from Faye.
Hmm.
My husband and I are living apart for medical reasons. I am doing our taxes together, which I was told to do.
Yeah.
We are in the process of doing his GIS application. Will the tax return affect his application? Last year,
Yeah.
a Ufile was deleted, so I can't access our return. Am I able to get it from Ufile?
Okay, so for your case for the GIS application, you have to contact Service Canada, okay, to indicate them that you have an involuntary what the technical term is, an involuntary separation. Okay, normally the Service Canada will either send you a form or through the phone with the agent. They will make the application as an individual application instead of a combined application. Okay, nothing that you file can do can make the difference there. You have to contact Service Canada to advise them that you have involuntary separation in that case. As far as deleting of the file, I don't know what happened there. Am I able to get it from Ufile? I mean, did you use online or did you do it in Windows? If you did it in Windows and you deleted the file, there's nothing we can do. If you did it online, then you have access to your previous year's file through ufile.ca in that case.
Next question is from Mary.
Mm-hmm.
I have a spousal RSP payments, but my husband does not have any RSP limit left according to his assessment. Can he still claim his deduction or can I claim it instead?
So I have RSP payments, but my husband does not have any RSP limit left according to his assessment. Can he still claim his deduction? I'm assuming payments you're pulling out of the RSP, Mary. That's what I'm assuming here, is that you're withdrawing already from your RSP, and does not have any RSP limit left. According to, can he still claim this deduction? Okay, okay, so then your spouse is making RSP spousal contributions. Normally, it is your husband's limit that counts, not yours. So what your husband does through an RSP spousal contribution is they contribute to your account, but they use their limit to make the contribution. So if they don't have any more limit, they can't contribute. They can't use your limit to make those spousal contributions. They're not allowed. It's not allowed.
Diane,
Mm-hmm.
my daughter has two T4As with an amount in box 105. I
Five.
cannot find box 105 in the program.
Okay, so that, Diane, it's in the T4A slip. You're going to go to other information, or box 28 plus, as we call it. Okay, so when you're in the T4A, let me just go there now. I won't show it on the screen because it'll take a little long. Then we need to get to all the questions. We didn't expect this many questions today. That's great. I mean, that's really
Yeah.
great. Let me just go into it. I'll tell you exactly where to go. So when you're in the T4A slip, okay, you're going to notice a section, a line called other information in bold, and it's going to say code 028 or or box 048. There's a drop down menu there. Click on that one, and 105 is going to be in that drop down menu. Select it and plug it in.
Okay, and actually that should also apply to Paulette. She says she has a T4A with a box 119
Mm-hmm.
of 1,550. I believe it's the taxes we need to claim for medical dental care
Yeah,
insurance. So
premiums paid. It's
yeah,
not taxes. It's the actual premiums that were paid,
so
essentially.
you'll find it at
So
the
yeah,
same place.
same place. Yeah, Paulette, it's the same thing. Exactly.
Okay, Martin,
Okay.
I am self-employed doing temporary jobs in accounting, including advising. Last year, I worked on the federal elections for Elections Canada. Can I put
Yeah.
my pay for Elections Day as a business earning?
No. It's another employment income. You're not self-employed. You were working for an employer, which in this case was Elections Canada. So you have to include it as employment income. So it's either going to be other employment income or on a T4 slip. If there were withholdings at source, then you will plug it in into a T4, even if you haven't received one. If there's no withholdings at source, they simply paid you an amount. You're going to plug it into other employment income. So when you go to the employment income section of Ufile, there's going to be a line, an option that's other employment income. You're going to plug it in there. It's not a business income because you weren't contract. I mean, yeah, you were contractual in a sense, but you were given orders, okay, to on how to work. Okay, so in this case, it would normally be employment income.
Yilin, can
Mm-hmm.
self-employment loss be carried forward? Can
Yeah.
it be used against any other gain? My kids are 6 years old. Do they have any tax credits available? Can they get GST refunds?
Okay, can self-employment loss be carried forward? Yes, as long as you don't have any other income to use it up against. Okay, so normally what happens, a business loss that you have in the year gets applied immediately against every other income. If after applying that loss against every other income, you have a negative net income, then that negative net income becomes a non-capital loss, which can be carried forward for 20 years and can be carried back 3 years. Okay, that's what you can do with that loss. And I think I answered the question. Yes, it can be applied against any other income. Okay, on your return, and your child, no, your child would not be eligible for GST tax credit because they have to be at least 18 years old. Okay, in order to claim the GST tax credit, so they can't.
Okay, Sarah, do you recommend to use the CRA's autofill? Does it make the filing easier?
Yes, yes, and yes. Can I say yes again? I mean, it's a no-brainer. If you have the My Account portal with the CRA, which is the requirement, by the way, you have to sign up for the My Account portal with the CRA to be able to do the autofill. It's a no-brainer. I mean, first of all, the word says it all. Autocomplete. It'll literally autocomplete the relevant sections in Ufile. That's what it's going to do. Number one. Number two, it avoids mistakes. It avoids omissions in your file. So why would you want to manually input all those amounts? Just let autofill do it and let Ufile do it for you as well. So no, it's a no-brainer. It's a no-brainer.
Okay, Leo, my issue is that I'm retired and out of the country and don't have access to my government company pensions, my government and company pensions. He should be able to access his My Account.
Yeah, through My Account. Yeah, exactly. Or
So to
contact.
follow you, yeah,
Yeah,
or contact the CRA
yeah.
directly.
Contact the CRA directly. Yeah, exactly.
Trinity, do I need to keep the prior year information when filing if I do not require any installment payments, or can I simply just remove that field?
Do I need to keep the prior year information when filing? No, I would. Okay, that's this is in Ufile. I would keep it because we keep that information is used for your 2-year summary in Ufile. Which shows you side by side what you had last year and what you have this year. That's a really important summary that the program gives you because it allows you to see what you declared between the years. So that way you didn't miss anything when you're producing your return. Okay, so no, I would keep it if I were you. I mean, it won't affect your return, but yeah, it won't affect you, especially if you don't have installment payments. But I would keep it there either way because of the 2-year summary.
Okay, John, for autofill my return, upon download, I'm not having any of the amounts listed under the T3s, T5008 and T5013 listed in my account transfers to Ufile. How does checking the box update from CRA again affect my download as opposed to just downloading it again? What is overridden?
Okay. Okay, upon download, I'm not having any amounts listed. I don't think it does I don't think there's a difference really between update. It doesn't affect it. All it's going to do is just going to update your amounts. The only amounts that change is for example, if let's say another emitter of a slip has sent something after the first time that you have downloaded the slips. Okay, that's the only difference between what it was before and what you're going to get afterwards. So you don't have to worry about updating from the CRA. Don't worry about that. You could do it, and it'll simply either keep the same amounts and nothing changes, or you're going to get new amounts in this case.
Josefa, he said he was living and working in Ontario on December 31st. Did he have a previous question?
Yeah, he did. Remember, I had explained he had moved during the year and it was
Okay.
required to file a Quebec return. So that's what.
Okay.
Yeah.
Sorry, I'm just going to go back.
Yep.
I think I lost it.
Okay, well, I'll show them. Can you see them on the screen?
Yes.
Over here. So Suzanne.
Suzanne, for medical expenses, when we pick the last date of expenses in the middle of the year, do we divide the amount of health plan and just part of the year?
For medical student, when we pick the last day of the exam, yeah, you would have to. Yeah, I mean, you would have to prorate if this is, for example, fees that you paid. Fees that you paid for medical insurance. Normally, you're paying them throughout the year with your pay, so you do have a date there that you could assign to it. So yes, you would have to split in that case. Then there was Lydia that I missed. You thought, where do I enter the information for the form TP 64.3? It's in employment expenses. So when you have employment expenses, when you're entering in the section employment expenses, you're going to see a section called employment conditions. So it's in there. You're going to have an option between federal and Quebec. Okay, it's going to give you both. So 64.3 is the Quebec equivalent of the federal conditions, which is the T2200. Just go in there in the employment expenses. Within the sections on the left-hand menu, let me just show it real quick on the screen. Okay, so 2 seconds, Ida. Okay, so when you are on the screen here, notice that I'm in the employment expenses section right here. Okay, once you've chosen the employment expense, the relevant section or category, you're going to see a section called employment conditions. It's in there. That's where your 64.3 resides. Okay, so that's where you're going to go and get it. All right, hide. Let's go back.
This one is Diane.
Okay, so let's go to Diane.
My daughter has tuition enrollment available with no carryover from 2020. Her income for 2021 was $4,764 for the year, including her RESP payout and two 105 incomes.
Yeah.
Can this be carried forward to my taxes as a deduction?
Okay, so by 105, I'm assuming she's got a scholarship. I'm assuming you're mentioning T4A box 105, which would mean scholarship income. My daughter has tuition enrollment available with no carryover from 2020. Her income for 2021 is 4,700. Okay, so she's not taxable. Yeah, Diane, you're right there. Including her RESP payout, and two, can this be carried forward to my taxes and deduction? Yeah, her tuition can go to you as a credit. Yes, she could transfer over up to a limit of $5,000. Okay, that's what she's allowed to transfer over to you, assuming in this case, Diane, that the two incomes are not taxable. Okay, but by the two 105 incomes, you mean scholarship income. If your daughter was in full-time studies in the current year, meaning 2021, 2020, and 2022, then the scholarship income is not taxable on the return, and therefore, if the only taxable income she's got is $4,700, absolutely, that amount you can claim as a tuition credit transfer to you, again, up to a limit of $5,000.
Basel, in Ufile software, where is the difference between steps 3 and review? Step 4, tax return, where I click and accept the button to confirm.
Okay, so the difference between the two, step 3 is just a bare bones summation of the return, where you see whether you have anything owing or whether the government owes you with a refund in this case. Then you've got your error messages where you might be missing certain information. You're going to get that all on the review page, on the review tab, and whether you are eligible for Netfall or not. You're going to see that on the review tab. On the tax return tab is the reproduction of the official forms of the CRA, and if you're in Quebec, of Revenue Quebec, based on the entries you've done in the interview. So that becomes your archive. Okay, so your tax return page is where you archive your physical return. Okay, so if you were, for example, to paper file the return, that's the page that you would need in order to print off and mail the return. But since you are transmitting the return, it becomes your archive. Okay, your beyond Ufile archive of your return.
Okay, this is to answer to Morris and Salim. You're having issues with the software. You need to contact our support team and reply to the automated email. It's help@ufile.ca, whether you can't print, if you have trouble accessing your file. All right?
Yeah.
Now let's go back to Yudi.
Okay.
Regarding selling and buying my residential house, I understood how to declare the selling part. Do I need to declare the buying another house part?
Not right away. Not right away. No, you're not declaring. Just keep it. Just keep note of the amount, because the year that you're going to sell the property, you're going to need that information in order to declare the capital gain. Okay. So for now, no, there's nowhere to declare it on the return, the house that you have acquired, but you do declare, of course, the house that you sold.
Okay, Leo, like we said, you need to contact the CRA, or you could actually also go on my account and download the slips. Chris,
Mm-hmm.
I apologize for asking the question related to this topic. In the personal use screen under expenses incurred, do lawyers' fees qualify along with real estate fees, including GST?
In the personal use screen under expenses incurred. Okay, I'm assuming the rental property. No, I believe, Chris, in this case, like I mentioned before, these expenses are related to the sale of the property. So the government is going to consider them as capital in nature, which means you have to go to the CCA section. Okay, so where you input the acquisition cost of the property under class 1 at 4%, you're adding it to the cost. Okay, that's where you're adding those fees.
Next one, Nancy. Can I use Netfall if I am filing my taxes for the first time with a temporary SIN number?
It's possible, but they might not accept it. Just giving you a heads up. But I believe you can. But it depends. I think with a SIN number of 9, you might not be able to, because usually the temporary numbers start with a 9 or a 0. You might not be able to. Actually, you know what? Come to think of it, I don't think you can. Come to think of it, because I remember helping out somebody, and they had a SIN number of 9 and they couldn't. Now the program's going to tell you. I mean, very simply put, plug it in, try to do it, and if you can't, Ufile is going to indicate it to you whether you are allowed or not and why. It's going to tell you.
Okay. Jita, where do I claim legal fees paid to obtain child support?
Legal fees, that's a good question. You would go into if memory serves me, you will go to other deductions and credits. And you would choose it under other deductions, I believe, is where you're going to go. Let me just check if there's any employment expenses there. Legal fees paid to collect. Yeah, but that's for salaries and wages. Yeah, so if they are deductible, you will go to other deductions and credits. That's where you're going to go. And you're going to choose the first option, which tells you federal line 232 to 23,200, which is other deductions. That's where you would go. But I'm not sure you can. I'm not sure, because child support, remember, is not taxable, right? It's not a taxable amount, so I'm not sure you'd be able to claim those expenses, to be honest with you. Double check with the CRA, but if memory serves me, you can't. I don't believe you're allowed to claim them in this case.
Next one is from Harry. Besides my own, I do the taxes for my children and grandchildren.
Mm-hmm.
They have set me up on the CRA as their representative level 2. This allows me to file their taxes. Do I use Netfile?
In theory, no. In theory, you would be filing under Ufile, and you would use something like Ufile Pro, for example. Okay, because if you have an authorization like that of these customers, then the government is expecting an e-file and not a net file. Because remember, net file, the government is assuming you're filing it on your own. Okay, e-file is when it's done by a representative. So legally, again, the government gives you a grace of 20 returns that you can net file for people without them getting fussy over. But if you've got an authorization on their file, usually they're expecting an e-file and not a net file in this case.
Okay, Denise, how do you move a dependent from their parents' return onto their own file or onto a common law or joint with a different family head, without recreating the return?
Ida, you wanna
I don't think
answer
so.
that
That can't
question?
be done. That can't be done. You
No,
have to recreate the file.
no. Unfortunately, it's a limitation of the program. Unfortunately, it's a good
Okay.
question, Denise. It's just unfortunately a limitation of Ufile right now.
Okay, Antoinette, I am disabled. Can I claim the stair glide on the Ontario Senior Tax Credit for fixing your house, the 25% off that is available on 2021 taxes, and also on my disability medical exemption?
Yes, you're allowed, Antoinette. As long you are disabled, which means I'm assuming you have the disability certificate that is recognized by the CRA. If you have that and you are over 65 for the Ontario side, because Ontario does add that wrinkle that you have to have 60. You have to be 65 years of age and older. While federally, for the home accessibility tax credit, credit, you only need disability. Age, you could claim it as 65 and above with no disability, or just purely with disability. Okay, so yes, you can. Yeah, absolutely, you're allowed to do it as long as you have disability and you're over 65. You can claim the home accessibility tax credit on the federal, the Ontario Seniors Care tax credit on the Ontario side, and you could claim them as a medical expense as well, as long as you have a disability certificate. You're allowed to double dip on all of them.
Okay, Paulette, is it better to borrow money to pay back the CRA, or should I cash my RSP or can I pay monthly? If so, how much is the interest?
The interest is not high with the CRA, to be honest with you. They're using the market interest. So chances are in this case that the interest that you would pay on a loan would be more than what the CRA is going to charge you for any amount owing. Okay, those are the chances there. Now, the catch if you cash in your RSP though is that you just increased your income. You've just increased your taxable income, because the moment you withdraw from your RSP, okay, that's taxable income on your return. So next year you will have a new income to declare and more taxes to pay again. If you have a TFSA, go with that. That's what I would cash, because a TFSA withdrawal is not taxable. So therefore you could pay off your amount to the CRA. Okay, if not, personally, you might even be better borrowing in this case instead of withdrawing from your RSP. Okay, because yes, the interest would be higher if you borrow than if you pull out of your RSP, but now you've just added income to your tax return with your RSP withdrawals, and chances are it's going to be a lot costlier than borrowing to pay off your amount owing.
Okay, next question, Shelley. My son is in high school full-time, made 6,400 from part-time work. He did his own taxes for the first time, and Ufile said can't hand in because he has done his taxes before.
Okay, no, we answered that one. We
Oh, we
answered
did.
that one,
We
Shelley.
answered.
Yeah, we answered that one, Shelley. Yeah.
William, accessibility grant. Do you put Ontario accessibility grant? Do you put the percentage of the cost in the box?
Ontario Accessibility Grant. Do you put? That's a good question. William, we'll get back to you. I'll answer you that one. I have to check in the forms. I don't remember offhand.
Okay, Judith, if you change residence mid-year during the course of the year due to sale and you no longer are the head of household for the rest of the year due to the adult child now on their own, should the return be now split in two, one of the adults and the other
You
for the
mean,
child, or will, okay, so they want to know if they filed for the full year as a dependent or still living or as an individual.
you could leave them in the file. It's not, you could leave the dependent in the file, even if they're an adult now. Because remember, even if you're a single parent, for example, and the child turns 18 the year, you're still eligible for the eligible dependent amount. You're still entitled to it because you still meet the criteria of at one point in the year. So you're still allowed to do that. So no, you could still leave them there as long as you could claim amounts that are transferable from the child to you. Like, for example, tuition fees. Excess tuition fees are one amount that an adult child can transfer to their parent. And in this case, we recommend that you have everybody together in order for the program to optimize those claims.
Okay, we just did Judith, right?
Yes.
Okay, Suzanne, how do we know what to put in the comments section of the T4A for the pension or supination, box 16? Example, registered pension plan, unregistered pension plan, other eligible pension.
Well, you would have to check. You have to check with whoever the emitter is, to see which one it is, because it makes a difference in this case as far as certain credits. So you would have to check in this case with the employer, with not the employer necessarily, but whoever the emitter of the slip was, because it's very important that the option that you choose there.
Okay, Allison, are there any tax implication if my father takes his refund instead of putting it to his installments account? He is already paying the installments for this year because some years he takes more out of his RSP than
Yeah.
others.
takes his refund instead of putting it in his installment account. No, not necessarily. They're still going to be subject. Remember, whether you have a refund or not doesn't mean that you won't be subject to installments. It's the installments that create the refunds in the end. That's essentially what happens in this case. So no, I don't believe offhand. Let me just read it again. If my father takes his refund instead of putting it to his installment account, he's already paying installments for this year because of some years he takes. No, there shouldn't be any effect really as far as the return is concerned in this case.
Uh, Fadi, can I
Mhm.
transfer my wife tax files from another application to Ufile for the present year application? Is it feasible, and vice versa?
Well, vice versa, we don't know. I can't speak for the competitor, but yes, you can. You could take, I believe it's TurboTax and H&R Block. I believe that we support, right? We could take files from them and carry them forward, essentially. From I'm just checking right now, but I believe you can take I believe it's TurboTax and H&R Block, and you could import them into Ufile. You can do that.
Okay. Next is Dina. If someone moved from study by mid 2021 to Ontario, but his spouse lives in Alberta, so is this case what is the province he should have by December 31st, and how climate action will work in this case?
It doesn't matter where they physically are. It matters where their principal residential ties are. So in this case, if they move to study to another province, but their spouse stays behind and their home is there as well, then they are still considered as residents of the other province, not the province that they're studying in, but the province that their spouse and their house is. It doesn't matter where they are physically. In the law, what matters is what the government considers as important residential ties is where your permanent home is and where your family members are. In this case, they're both in Alberta. So for that client, they stay with Alberta. Okay, and for the climate action incentive, then it's become a benefit now. That's the change there. So they simply declare the Alberta one. That's what they're going to declare, even though they're physically in another province in Ontario.
Okay, Yana, if I fill and file Form T1135 via e-file, do we still need to physically mail the T1135 form?
No, no. If you've transmitted electronically the T1135, which is the foreign property verification, the government has it. That meets the obligation. You don't need to actually. What you need to do though, if you're doing this for a customer, is you need to print it and have it signed by your customer. If you're a Ufile Pro user, for example, but if you're just a standard Ufile user, then no, you don't have to.
John, can donation to USA registered charities be deducted from US income?
Yes, actually, that's what you need. Actually, the only way you can claim donations from registered charities in the U.S. is if you have U.S.-based income. If you don't have any U.S.-based income, you can't claim those charities, those charitable donations. So yes, absolutely, absolutely, you can.
Fadi, how can we file the T1135 with the tax return, or do we file it separately?
I think with UFile itself, I don't believe it can be done. Can you transmit the T1135 directly through UFile? I don't believe so. I don't believe it's part of Netfall. I think it's a paper file. But if you're using eFile, then yes, that is a part of it. That is a part of it if you're a UFile Pro user and you're doing returns on their behalf.
Okay, Dimitri, I sold rental property. Where should I report last day of sale? I reported on capital gain, but when I change last date of fiscal year end of the rental property on the T76 form uh, to the day when I sold it, I'm getting an error.
Okay, sold the property. Where should I report the last day of sale? But when I change the last day of the fiscal year end of your rental property, the day when I sold, I get an. Well, that's weird. You shouldn't be getting an error message. You should accept. Dimitri, contact us. Contact our support line because they should do it. There shouldn't be any issue there.
Emma, I tried eFile last year but said my SIN did not exist even though I had my notice of assessment number from the previous year. So I filed by paper. What do you suggest?
Tried to e-file last year, but said my SIN did not exist, even though I had my notice of assessment number. You could paper file if you want, but no, I would try to resolve it. I mean, you should be able to transmit electronically. There's no reason why you can't transmit in this case. Just try again in this case.
Okay, Chris, what do I put in the field your percentage share of capital gain loss in the personal property screen?
So this one depends, Chris, if you have if you're sharing the property with somebody else, whether it's another shareholder or whether it's your spouse or another family member. Let's say, for example, if the property is co-owned with somebody else, then you're entering your percentage in this case. Okay, if it's not co-owned by anybody else, you could just leave that. You could just leave that box blank.
Okay, next question is from Cheryl Lynn. My second question is, I am doing a final return for a family member that passed away very early in 2021. There is only one T4 slip and one T4 RSP slip made out to the estate. Can these both be claimed on the final return? There is no need for an optional return otherwise, and no money owing. Is there a need for an accountant? It seems straightforward to me in this case.
Okay, so I'm doing a final return for a family member that passed away. Okay, and there's only one T4 and one T4 RSP. Can these both be claimed on his final return? Okay, it depends. Okay, the T4 absolutely, Cheryl, but the T4 RSP depends. Who are the beneficiaries of the estate in this case? Okay, if it's made out to the estate, then chances are it's probably somebody other than the spouse or a financially dependent child, which means then in that case, yes, you declare it on the final return. But if the pension has been transferred, if the account has been transferred to a spouse, then in this case, it's the spouse that has declared that slip, but usually it would be in their name, usually, okay? So just based on the information that you're giving me right now, again, I don't have all the facts in this case, then yes, you could simply declare it on the final return in that case.
Dana, can you explain what I do with the amount in the CNIL?
The amount with the CNIL, it's only in the case where you sell what we call qualified small business corporation shares, or if you sell a family farm. Okay, and what CNIL will do is it'll reduce the amount of the lifetime capital gains exemption that you're entitled to in the year that you sell those shares. And by qualified small business corporation shares, we mean basically like a family corporation. A small private corp that you've sold and you made a profit on. Usually, those gains are exempt up until a certain limit that is prescribed for life. All of us have this lifetime exemption. What CNIL will do is reduce that limit for those exempted gains. That's essentially what CNIL is.
Judith, is there a tax form that you get with regards to sale of your home?
No, you don't get no. Basically, what you're going to do is take the official contract, take the official sale contract, and use that. Okay, to be able to declare the transaction on your return.
Rana, I am an Ontario resident, but I have to file a partnership income in different provinces, including Quebec. How do I file in Quebec only for this partnership income?
Okay, so I'm an Ontario resident, but I have a file partnership income in different provinces, including Quebec. How do I file Quebec only for this partnership income? Okay, so I'm a Ontario resident, but I have a file partnership income in different provinces, including Quebec. Okay, so I'm assuming that you have to declare partnership income then in Quebec. No, you'll do what's called a multi-jurisdiction return, which Ufile supports. So what you're going to do is in the T5013, when you're inputting the T5013, there should be an entry for the jurisdiction. Go in there and indicate the percentages of each province, and then the program will generate the Quebec return with the other multi-jurisdiction form, which is the T2203. Okay, that's essentially what the program will do.
William Garrett, regarding Ontario home accessibility expense, do you put the percentage of the cost in the box? I don't remember if we answered that one.
So regarding home accessibility expense, do you put the percentage or the cost in the box? No, I was going to get back to William. William on that one. Yeah, I was going to get back to him.
Okay, Trinity, I received a T4A slip from my insurance company from a dividend based on my premium. Do I enter this as a taxable or non-taxable patronage allocation?
I received from my insurance company from a dividend based on my premium. Do I enter this? I'm not sure. Trini, I'll be honest with you. I'm not sure on that one. It depends. You'd have to contact the emitter of the slip to see whether it's a taxable or non-taxable patronage dividend. It depends. It depends on this case. I'm not sure.
Okay, Neil, I have a T5 in US funds. How can I convert the amount in Canadian dollars?
Well, usually, I think in the T5 slip, do we include an exchange rate? Let me see. Yeah, we include an exchange rate. So at the top of the entry of the T5 slip, there's a box where you can indicate the exchange rate. So simply plug it in there, plug the rest of your amounts in USD, and the program will apply the conversion automatically.
Okay, Dina, if someone forgot to claim the T2202 for a year, can it be claimed the next year? Another question, if someone contributed to an RSP in 2021, can it claim it next year if found over contributed or choose to?
Okay, can be claimed next year? Okay, if I claimed forgot, can it be claimed? No. No,
No.
no, 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 no. You have to adjust the previous year's return. That's how that works for a T2202 from the previous year. If someone contributed to an RSP in 2021, can it claim next year? If found no, again you have to adjust your 2021 and declare the contribution on Schedule 7 of 2021, and then you can carry forward to 2022. But you can't simply decide to take it and plug it as a 2022 contribution. That doesn't work. That doesn't work.
Okay, Julie, hi. I need to pay CPP for self-employment. In my summary this year, I have two lines. One line is the
Mhm.
20 line 200 deduction for CPP. One is line 31000 tax credit CPP contribution on self-employment. Why are these added together to give me the total payable? Isn't
Okay,
that
one
the
well, one is the deduction, and one,
employee
well,
and
yeah,
employer?
exactly. It's employee and employer. So what you're doing is you're first deducting the employee, but as a self-employed individual, you have to pay the employee employer. So for those of us who just work under salaried, our employers pay that portion, and we pay the employee portion. But when you're self-employed, you're employee employer, so you're paying both. Okay, but you are deducting the employee portion. That's why you have that amount on 22,200. Okay, that's why you have that amount.
Okay.
I think we got Shirley.
I think yeah, Shirley
Oh,
was
we're
about
done.
the roof. You don't add
Okay.
the roof, I believe. Anne Marie, about her mom passing away. I believe we answered that.
Okay.
Um, let me check.
Yeah, Anne Marie. Okay.
Mary Schneider, is it possible to change a family head in Ufile, and how is it done?
We can't.
No.
We can't. No, unfortunately, no, Mary.
And I think that covers. Oh no, can you remove the spammer? Oh, sorry.
Yeah, yeah,
Can
yeah. We'll try. Unfortunately, it's live, Thomas. Unfortunately, I see it. Unfortunately, it's live, and there's not much we could do. As we mentioned, Paul,
the
just contact
contact?
our.
We cannot access your
I
file, and we
I
cannot
can't
show it
access
live
anything.
online to everybody.
Yeah.
Anyways, next one is Camille. On my 2020 tax return, I have 0 RSP contribution, but I have a 1,400 to repay for the first home buyers. So when I enter this information, Ufile gives me a warning that I've over
Yeah.
contribution, even though I put 0 for the RSP. Any help?
On my 2021 return, I have zero in RSP contributions. Okay, but I have 14. Okay, in new file that I've. Just make
Actually,
sure. Oh no. Okay. What you have is there's an entry in the home buyer's plan that says your designated repayment. You have no designated repayment, so don't put anything in that entry. Just put in the amount that you're supposed to repay, and put nothing in designated repayment. That should clear that error message, because right now what's happening is that you're indicating, I believe at least, you're indicating a designated repayment, but no contribution, no equivalent contribution, and that's why it's getting flagged. So don't put anything in designated repayment under the home buyer's plan area, and then and then the program will add it to your income, which is what's supposed to happen when you haven't made a contribution to your RSP and you have a home buyer's plan to repay.
Sarah, I used Ufile to file taxes for my son, but forgot to enter his university tuitions. Can I resubmit in Ufile, and how?
Yeah, you do it through the refile option. Okay, it's within the Netfall section. I believe once you've transmitted, there's going to be a new option that appears to be able for you to refile your return. But remember that you have to wait for the notice of assessment. The government will not accept the refile unless you have a notice of assessment.
Ibrahim, hello. Can you specify how much CCA you want to depreciate for an investment property?
Yes. The way you do that in the CCA section, there's an entry that says limit of CCA to use. Just plug in the amount that you want to use instead of what the program is applying automatically. That's how you do it. There's a like I said, an entry towards the bottom. The CCA section says limit of CCA to use.
Okay, Gabe, when is the best time to reclaim? I forgot to include charity expenses for 2021. I have already submitted my claim.
Adjust. Either do a refile or go into the CRA's My Account portal and do an adjustment of your return and claim them. Simple as that.
Arsha,
Mhm.
if we rent out a house which was primary residence, we need to deem disposition in tax return. How do you make the entries of it?
You do it like as if it's a regular transaction, like as if you sold it at fair market value. So you have to estimate what the fair market value of the property is as of the date that you moved. Okay. And then from there you enter it like as if you sold it, and then you designate it as a principal residence. Okay, just like I showed earlier in the video. Okay, so in the real estate, you're going to designate the years that you lived in it as a principal residence. It's as simple as that, and then you won't have anything taxable. There won't be any taxable income to declare in that case.
Mm. Chris, I accidentally removed the CNIL from that was populated from a T5 form that I entered in investment income. How do I get it back?
CNIL. Well, you simply enter it in the relevant section. Let me just check. I think it's investment income. I'll just go in there. Okay, let me see. I'll tell you now in a second. I'm just searching it now. Yeah, it's an interest and investment income. Okay, that's the investment income and interest, and then you're going to have an option at the bottom that says other schedules, which is T936 CNIL, and you simply plug the amount in there.
Okay, Vlad, I am in a new position where I am able to claim vehicle expenses. My colleagues told me all I need is the T2200. When I asked if he was required to provide information for the form T777, such as kilometer driven, he said no. How do I claim expenses using the T2200? I have been keeping track of the kilometers driven for work and vehicle maintenance, but not total kilometers driven in the 2021. How do I claim expenses without the T777?
Okay, so I'm new. Okay. When I'm able to claim it, my colleague told me I need. Okay, yeah, that's true. Okay, when I asked if they're required to provide information as kilometers, he said no. You do. Vlad, you do need the kilometers. Specifically, what you need is two kilometers driven for business and total kilometers driven is what you need because the program is going to ask you for them. Okay, how do I claim them? And it's actually T777 you're going to do. So you're going to go into T777 as a salaried employee, I'm assuming, unless you're a commissioning employee, then you choose commissioning employee. And then within the employment section, you're going to see a section called, on the left-hand panel, you're going to see a section called motor vehicle expenses. Just click on that and just plug in your motor vehicle expenses, including the kilometers when it asks you.
Shelley, if I have medical expenses, is it better for me to claim it or have my dependent claim it?
Okay, if I have medical expenses, it's better for me to claim it or my dependent to claim it. Shelly, it all depends who paid it. It's as simple as that. Okay, so it all depends who's actually paid the expenses. Is it in this case the dependent that has paid them, or is it you that has paid them? So it's not an optimization. Okay, you really have to show who paid the expenses. If your dependent paid them, they claim them. If you paid them for your dependent, then you're the one claiming them.
Okay, Kim, where can I get more help for various entry boxes? The Ufile help sometimes only repeats what the field is, but may not elaborate enough. Is there more information somewhere and where? Gerry, plug your YouTube.
Where can I help? Various entry box. The U file help sometimes only repeats what the field is, but may not elaborate enough. Is there information somewhere? Well, yeah. I mean, we have some training videos on it, right? On our YouTube page. In this case, where can I get help? Yeah, basically, it's the question mark. Essentially, I mean, that's usually the best way to do it. Only repeats what the field is, but may not elaborate enough. Yeah, you just click on the question mark next to the field, and usually we'll give you tax rules in there as well.
Okay,
Okay.
we're just going to take the last 3 or 4 questions where we are over an hour.
Yeah, exactly. Yeah,
Past,
we're
and
way over.
we need to get on. Okay. Emma, why does the paper tax form not indicate the sale property only online filing? Emma, you need to. The Windows software does work pretty much the same as the online. You need to check it off in the interview section or the CRA question. Just make sure you have the most recent update of the software. And if you need assistance, please contact support, reply to the automated email. Devin, for the COVID-19 temporary flat rate method, the form in the web version is giving me 2 different options to select that I did work from home more than 50% in 4 consecutive weeks from 2021. If I select both, it alters my return by approximately $150. Should I select yes under both entries?
Okay, the form in the web version is giving me 2 different. In the web version, you need 2 separate for 4 consecutive weeks. If I select both, yeah, Devin, I'm not sure why you're getting that. You shouldn't be getting 2 options. It should only be giving you 1 option, and then you just enter the number of days, your number of work days, and that's it. You know that's all it should give you. I don't know why you're getting those 2 entries. That's very bizarre.
Okay.
Let's do like
Shirley,
one last
yeah.
question, and then we'll answer the other questions in the chat. We'll
Okay.
answer them
On
in
the
the questions.
medical page at the bottom of Quebec, prescription drugs that you chose federally only if you live in Quebec. Also, I apologize the question I previously asked about the new roof. Okay. Shirley, I'm not too sure about your question here about the medical expenses. The prescription drug, what do you choose, federal only or federal in Quebec if you live in Quebec?
Okay, on the medical page at the bottom, prescription drugs, what do you choose, federal only or federal in Quebec if you live in Quebec? Well, normally for the prescription drug plan, the program will apply the rule where it's taking it'll apply the current year amount that you're paying automatically as a medical expense on Quebec, and will take the amount that you were charged last year on what's called in the following year. That's essentially what that is. I'm just going to go real quick to medical. Let's go there. Yeah, I'm not in Quebec, so I'm just going to look at it real quick. Okay, so if I go to medical expenses, and I'll just double check it here. Yeah, Quebec Drug Insurance Plan. Yeah, it's usually federal only. Yeah, it would usually be federal only. Federal in Quebec would only be if you chose a different date. If you chose a different date for your medical receipts, instead of having December 31st, you could choose, for example, June 30th, for example, for your medical expense period.
Okay. We are over an hour. We are over an hour.
Well, yeah,
Overdue.
we doubled our time.
We need to stop. We're way over our time.
Yeah.
Gerry will do his best to answer anybody who hasn't been answered yet in
The chat,
in the comments at the bottom of your post. Also, I will, if there are a few that I need your emails, I will email you, send you a private message. All right. So this concludes our Facebook Live event for today. Our webpage has lots of information. Ufile.ca. You have our blogs. You have Tax and You have frequently asked questions. It directs you to our podcast as well as our YouTube page that has some how-to videos, including some extra videos that you've done about the tax itself. Some basic rules and tips and tricks. So we thank you very much for listening. Sorry we didn't get to everybody's question. So Gerry, any words before we log off?
No, I think you mentioned everything. I mean, just go to our website, ufile.ca. Within our tips tab, we've got the Ufile blog where we write a lot of articles about these things. Go to our YouTube page as well. We have a lot of instructional videos. We've got some tax educational videos as well, which we call Ufile Let's Talk Tax, where we teach about different tax topics and give you some tips and tricks on being more efficient on your taxes. Don't hesitate to go there and check it out and get information. We also have our podcast as well. We produce about every 2 or 3 weeks. We will produce a podcast where we talk about various tax topics as well. So we give you a lot of information. I mean, look, we're giving you this kind of tax advice for free as well, provided directly, through Facebook Live. So we're there to help you out. We're there to try to do as much as we can to help you with your tax returns. So thank you, everybody,
Thank
for
you.
attending the session, and have yourselves a great day. Thank you
All
very
right.
much.
Thank you. Bye bye.